Okay, sorry for that. Let's look at today's topic. What we're meant to look at is sources of government revenue. Sources of government revenue, that's our topic 4 on my own end. Sources of government revenue. When we look at it, there are various means that government are using to generate revenue in order to take care of the nation. These sources of government revenue can be particulars to the government, that is, particular means through which government can generate revenue in order to take care of the nation. Now, government require revenue to perform its various functions. Hence, government strives to generate the revenue that is required. What are these revenue we are referring to? We have different sources of government revenue. This includes the following. We have taxation. We have what we call fee. We have what we call fines. We have what we call grants. We have what we call foreign investment. We have what we also call local investment. We have government disposal of government properties. We also have what we call renting of government properties. We have sales of crude oil. We have sales of natural resources. All these are means through which governments can generate revenue in a summary form. Now, analysis one after the other. We have what we call taxation. This is a compulsory levy imposed by the government where there is no direct benefit to be received by the citizen from the government for the payment. This levy is usually payable at different rates depending on the nature of economic activities conducted by the individual offender. When we come to fees, fees can be in forms of what? Public service or sharing of the basis. The service that government render as a result of that, you are meant to pay a certain fee for that. When it comes to fine, this in lines of what? Penalty for breach of contract or to have you have somebody that have in one way or the other commit a crime, then you are meant to pay for such crime. We also have what we call grants. Grants are niche in which government assists an organization or through another organization try to assist the government in order to fund them towards a particular project. This is referred to a non-refundable fund. Now, looking at it from that direction, this is referred to non-payable money received by the government from another government, which aim of helping such government either to improve or to start a project which of the great importance would be to the society of such government. Now, what we're talking about grants is that a kind of donation or fund put in place by the government in order to carry it out or to work towards a particular project. Aside that, we have what we call foreign investment. Apart from foreign investment, we also have what we call local investment. When we look at it from the foreign investment, government can invest in foreign projects that will earn them money. The interest on it will serve as what? Revenue to also work with the government in order to stable the economic system for the nation. Government can go by borrowing. We have what we call national borrowing or national debt, whereby government can relate with what? World Bank, IMF, Paris Club, London's Club, in order to be able to generate what? Particular fund for them to be able to do the need within the nation. All these are means through which government can generate revenue, sales of what? That's what we refer to as what? Disposal of government properties. It also serves as another means through which government can generate revenue. Then we have what we call revenue collection agents in Nigeria. There are different agents that can serve as what? Revenue collection agents in Nigeria. That is, they collect money on behalf of the government. Who are these agents we are referring to? We have one, IFRS, International, IFRS, that is FIRS, Federal Inland Revenue Service. That Federal Inland Revenue Service is an organization set up by the government to collect tax on behalf of the government. To collect tax on behalf of the government. To collect tax on behalf of the government. Now, in line with this particular word, act, the tax they are meant to collect, they are divisional of that tax, which we are going to discuss as we are going. But they are there to collect what revenue on behalf of the government, basically depending on the jurisdiction. When it comes to the federal, they are the one responsible for collection of tax on the limited liability company. But when it comes to the state, they are the one responsible for collection of tax from the enterprise, that businessmen. That is for that particular part. Okay. When we now look at it from that word aspect, they are also entitled to 4% collection charges for any money generated or collected on behalf of the government by the FIRS. They are liable, they are there to collect what? Certain percentage be deducted from the total money generated by these people. Now, when we now look at it from that end, Federal Inland Revenue Service, that one is basically related to federal, they are here to collect what? At each state also, they are also there. We have the revenue agents that are there to collect what? Tax. That's one is calling it, we refer that as what? Internally generated revenue. We have for Lagos State, we call it what? LIRS, Lagos State Internally Generated Revenue. At the other state also, we also have that what? Internally generated revenue. But at the federal level, it is called what? FIRS, Federal Inland Revenue Service. They are there to collect tax on what? Both on what? Oil and non-oil. But they are only entitled to 4% collection fee on non-oil revenue. When we are there, we will discuss. Then the next one, aside that, we also have what? Nigeria Custom Service. That's another word. Nigeria Custom Service. That is also responsible for collection of what? Tariff.
Scroll up.
Hello?
Scroll up, scroll up.
Can you see all what we have made mention of? Federal Inland Revenue, State Board of Internal Revenue, we have DPR, we have yes. Nigerian Customs Service. All these are the agents that they are there to collect what? Revenue on behalf of the government. Now, when we look at it, we also have what we call DPR, that is Department of Petroleum. We also have NNPC. All these are agents through which governments use to generate. Let's read what the book is saying, which will be a guide. Now, here we have what we call Nigeria National Petroleum Corporation, but presently now, call it to what? Limited. Now, NNPC came into being on the 1st of April 1977 through the decree number 33, that's 33, following the dissolution and merger of the Nigeria National Oil Corporation, NNOC, established by the decree of 18, 1971, and the Federal Ministry of Petroleum Resources. The establishment of NNPC was meant to optimize the use of scarce indigenous human resources available in the oil industry. That is the purpose of putting in place NNPC, basically for managing the resources, basically in oil industry. Then to discuss the federal inland revenue, that is the federal inland revenue service started as part of the colonial tax organization under the name of the Inland Revenue Department of West Africa. That was honored in 17th century. The department's scope of administration covered Nigeria, Ghana, and Sierra Leone as at then, and Gambia. When we talk of West Africa, those are the three nations, four nations that make up the West African nation at that time, which is basically Anglophone. Those ones that they are English speaking country at that time. They are being colonized by the whites, by Britain. In 1943, the Nigeria Inland Revenue Department was carved out of the internally Inland Revenue Department of Anglophone, West Africa, and established as the autonomous body under the supervision of the Commissioner of Income Tax at that time. We also have for the state. Now, the state, that one is basically meant for collection of what? All these federal, what do you call it? The business name or enterprise. They said at the state level, the Personal Income Tax Act 1993 established by the State Board of Internal Revenue Service with the responsibility of the personal income taxes of the individuals and non-corporate bodies except residents of Abuja. Now, what are we saying here? Federal is responsible for the collection of taxes on any company relating to limited, while the state is responsible for collection of personal income tax. Collection of personal income tax. Aside that, they are also there to collect tax from the enterprise or what? The company's name, that they are not limited. But they are not the one, the state is not responsible for collection of taxes of the military forces or police forces or the resident of Abuja. All those ones, they are meant to be paid to the federal government accounts, not to the state government. And anything relating to what? Foreign affairs, that is when it comes to what? Expatriates, they are meant to also pay their personal income tax to the state, to the federal government, not to the state government. But tax jurisdiction matters when it comes to what? The personal income tax that is meant to be paid to the state and the one that is meant to be paid for federal. But the one that is meant to be paid for federal, anything relating to military forces, anything relating to police forces, anything relating to foreign affairs, and anything relating to federal, the resident of what? Federal Capital Territory. Their money, their tax is meant to be paid to the what? To the federal government account, not to the states. While other individuals are meant to pay their own to the states. But when it comes to limited liability company, they are meant to pay to what? Anything relating to limited liability company as tax is meant to be paid to the what? To the federal. Now, we also have what we call Department of Petroleum. That's another body that is also responsible for collection of what? Generating of revenue to the government by monitoring the measurement and regulations of rules and the regulations of what? Of law in terms of what? Petroleum. Now, let's see what the book says. At the onset, the petroleum matters were handled by the hydrocarbon section of the Ministry of Lagos Affairs, which reported directly to the Governor General. The unit kept record on matters relating to exploration and importation of petroleum products. It also enforced safety and other regulations on matters which were then mostly products, importation, and distribution. As the activities of the petroleum industry expanded, the unit was upgraded to the Petroleum Division within the Ministry of Mining and Power. The Petroleum Division grew to become the Department of Petroleum in 1970. In 1971, a body, the Nigerian National Oil Corporation, was created in 1971, as we have stated it before, handled by the commercial operational activities in the oil industry on behalf of the federal government, while the Department of Petroleum Resources in the Federal Ministry of Mining and Power continue to exercise statutory supervision and control of the industry. They are the ones responsible for control and supervision. In 1975, the department was upgraded to a ministry and named the Ministry of Petroleum and Energy, which was later renamed the Ministry of Petroleum Resources. Decree 33 of 1977 merged the Ministry of Petroleum Resources and the Nigeria National Oil Corporation to form the Nigeria National Petroleum Corporation in 1977. The decree also created the Petroleum Inspectorate as an integral part of the NNPC and entrusted with the regulation of the petroleum industry. In 1985, the Ministry of Petroleum was re-established, but the Petroleum Inspectorate remains with the Nigeria National Petroleum Corporation until 1988, when the Nigeria National Petroleum Corporation was reorganized. Simply means that Ministry of Petroleum being divided into two, where we have what NNPC now, and we also have Department of Petroleum. They are the one responsible for monitoring and regulation and supervision of what oil industry. But they are not the one extracting the oil or this and that. That is the duty of what Nigeria National Petroleum Corporation. Now, aside that, we also made mention of what Nigeria Customs Service. That one is also responsible for tax collection, but the tax they are meant to collect is different from the FIRS tax. The tax that are meant to be collected by this organization called Nigeria Customs Service, they are responsible for collection of what? Import duty, export duty, excise duty. That is their own area of what? Responsibility for government to generate revenue. But let's see what this is also saying. It said, the Nigerian Customs Service, a paramilitary organization, has existed since a little over a century ago. The British colony administration with Mr. T.A. War was appointed in the year 1891 as the Director General of the Customs for collection of inland revenue ascertained in Niger Coast Protectorate. We are still under what? We have not. You don't know one class, you have to go online over. Now, when we now look at it from this end, the name Department of custom and excise emerged in 1992. Prior to this time, there was a particular organization called Royal Niger Company. Now, it appointed, formalized the duty, and the department had been performed under the, that is, as at that time, anything relating to tax is meant to be handled by the Royal Niger Company. Their duty is to look into the customs or exercise any excise duty. They are the one responsible for the collection. But after that, there was a division into the system. The name Department of Customs and what? Excise in 1922, when the first controller of the custom and federal of Nigeria was appointed. Towards the end of 1945, the Custom and Excise Prevent Service was established under the leaders of Nicol, a Briton. Now, that now led to what? The Nigerian Customs Service statutory function came to be broadly classified into two, categorized as core and other function. When it comes to core function of the what? Of this set of people, there are two core functions. What are the two core functions? We have collection of revenue, which is imports and excise what? Duty and accounts for the other what? Forms of what? Revenue. Prevention and suppression of smuggling. Anything that has was smuggling of goods into the country or outside the country, they are the one also in charge. While the other function includes what? Implementation of the government fiscal what? Measures. Generation of statistical data for planning purpose. We have what we call trade facilitation, implementation of bilateral and multilateral agreements. I believe you all understand what by bilateral and multilateral agreement. Bilateral agreement is what? When an agreement between the two states or two countries, that is BAC. When we talk of multilateral agreement, we are talking of the agreement between more nations, which we can talk of what we call signing of treaty among the nations. Signing of treaty among the nations or between two nations simply means there's an agreement on how to move goods or individual move from one place to another. Taking for instance now, when it comes to ECOWAS, being a member of ECOWAS, there are 4 benefits that are related to all the member nations, such as what? We have what we call common price, we have what we call common union, we have what we call common markets, and free trade. Free trade means what? Individual and goods can move from a member nation to another member nation without any forms of what? Disturbances. But there are times large to that. Nigeria can go to Ghana and spend 90 days without any issue. They will not disturb you, being a member of ECOWAS. You can go to Sierra Leone, being a member of ECOWAS, but there are rules and regulations guiding that. The same thing relating to goods. And in terms of custom duty to be paid is junior custom duty, which is an agreement between all the member nations that if the goods is moved from one nation to another nation, this is what is meant to be paid. That is what we refer to as what? Bilateral and multilateral trade. Then we also have collection of levies and charges. Collaborative functions with the government agency, including CBN, police, NDLA, SON, NAFDAC, and FRS. All these are what? The functions of what? Custom authority as Nigerian system is concerned. Any question before we go to the sources and classification of government revenue in Nigeria? Now, let's now look at it. We have what we call sources and classification of government revenue in Nigeria. Now, in line with 1989 budget, The federal government of Nigeria tried to categorize various revenue into different head and subhead. As the head of these revenues are concerned, we have what we call head 1, head 2, head 3, head 6, head 7, head 8, head 9, 10, 11, 12, 13, 14, 15, 16, and 17. And looking at it, you notice that something is also missing here, head 4. Now, that one is being what? Omitted as a result of what? It's meant to be what? It's relating to the federal government account alone. Now, when it's now come to tax, head 1 is what? Indirect tax. What is indirect tax? Indirect tax is the tax levied on goods. Tax levied on goods and service. Tax levied on goods and services. What are the examples of indirect tax, or what is the meaning? The tax levied on goods in which the amount payable, the taxpayer cannot ascertain, cannot assess the amount payable as tax, and the burden of the tax can be shifted to the final consumer. That is indirect tax. Example of indirect tax, we talk of import duty, we talk of export duty, we talk of excise duty. Value-added tax. All these, they are referred to as indirect tax. Stamp duty, that one is also indirect taxes. Other indirect taxes, rather. Then when we talk of what? Direct tax, that is the what? Tax levied on what? Income or profit of the citizen and their properties, in which the taxpayer can access itself to tax. And the burden of the tax cannot be shifted. The burden of direct tax can be shifted. The burden, depending on the nature. Hello? Do you people still remember what we call nature of goods in economics? Hello?
Sir,
Hello?
please remind us.
Now, when it comes to burden of the tax, when we are saying the burden of the tax can be shifted and it cannot be shifted, it is basically relating to the economic nature of that goods. If you can still remember, in economics, we have what we call perfectly elastic goods, imperfectly elastic goods. We have fairly elastic goods and fairly inelastic goods. These are the nature of the goods we are referring to. This determines what would be the nature of the goods and how the burden of the tax will be shifted. When we look at a perfect tax, when we look at it from the perfect what? Perfectly elastic goods, there is nothing like increase in the price of the perfectly elastic goods. Regardless of the what? Change in quantity you are buying, you are paying the same amount. The burden of that tax is meant to be paid. The burden of the tax will be paid by the producer or the supplier. The consumer don't bear the burden of that tax. That is why it's not advisable for government to increase tax. If government needs money, it's not advisable to increase tax on the elastic goods. But when it comes to perfectly inelastic goods, these are goods of necessity. They are goods of necessity that people cannot do without. In a situation like this, the burden of the tax will be shifted to the final consumer. The burden of that tax will be shifted to the final consumer. If government now in need of money, need of more revenue, it is advisable to tax such particular products more in order to generate such revenue. An example of what? Goods of necessity. We are talking of what? Electricity. Government, today government, you can see the effect. They increase what? They notice that people cannot do without petroleum. People cannot do without electricity. They look at it that the best way government can generate money is to increase the tax on those goods. and it will be more benefit to that particular government at that particular period of time. That is what we call perfectly elastic goods. As a result of that, that is relating to what we call indirect taxes. That is tax levies on goods. But when it comes to what, an example of what I've stated that under that, we can talk of import duty, we can talk of export duty, we can talk of what? And looking at it, what are the economic benefits for indirect tax and direct tax? Number one, it serves as sources of government, sources of revenue to the government. It serves as sources of revenue to the government. That's one. Number two, it serves as a means that can be used by the government to regulate the economic activity of the nation. To regulate the economic activity of the nation, depending on the policy that government is trying to achieve at that particular period of time. Now, we have what we call fiscal economic policy, and we have what we call monetary economic policy. If it is expansionary, government needs more money. Government wants to generate more money. That is expansionary economic policy. Government will what? Will work towards what we call surplus what? Budget. As a result of that, they will tax what? They will increase the tax rate. If there is increase in tax rate, that will have what? Negative impact on the citizen, but it will serve as positive impact on the revenue generation to the government. That is why we say that it is another means in which government used to generate revenue, and two, it serves as a means of controlling the economy, depending on what government wanted to do. Number three, it also serves as a means through which government use as a tool to control the pattern of citizens' consumption. Government use indirect tax as a means of controlling the pattern of people's consumption. If government notice that people prefer imported goods compared to local made goods, and the local producers are not making money, they are complaining, government will increase what? Import duties rate. They will now reduce the export duty rate and excise duty. As a result of that, the local producers will be able to meet up with their foreign counterparts. And as a result of that, people will stop consuming the foreign products. That is what we call by government try to control the pattern of citizens' consumption. They use tax to do that. They use to control the pattern of the citizens' consumption. They don't want citizens to control foreign products. They will increase the tariff on foreign goods and reduce what? Tariff on local made goods. Aside that, it serves as a means of relating to that tax also serves as a means for government to control the general price level of goods and services, depending on how they want to work. Do we understand what we're saying? Then from there, we have what we call that indirect tax. I've talked about it, that it is tax that is imposed on the income or property of the citizen. Now, on that part, this one is this type of tax is levied on the what? Citizen's income. The income of the citizen is subject to this tax or properties. Under this tax, what are the examples of this tax we can talk about? We talk of company income tax. We talk of personal income tax. We talk of petroleum profit tax. All these are referred to as what? All these are referred to as what? Direct tax. And the burden of this tax cannot be shifted to the consumer. that is the burden of directors, cannot be shifted to the consumer. Then from there, we go to Head 3. Head 3 has to do with what? Mining. The money we're referring to here, that is extraction of what? Crude oil. This one is also meant to be considered as a source of revenue to the federal government. We also talk of what? Allocation, that is distribution of what? Revenue among the citizens. Revenue distribution among the citizens. That is what we call direct allocation. There are rules to that. Then we also have what we call license and land revenue. All this land use charge, licenses, driver's license, all those ones, they are part of revenue. We also have what we call mining again. That mining is has to do with what? Mineral resources, solid mineral resources. That solid mineral resources is meant to be paid to another account, which we are going to discuss later. It's also as another revenue to the government. We have the fee, we have earning and sales of the government works, government properties. Renting of government properties is also as well. Interest and repayment in terms of what? General. That is when government took a loan, they need to repay, or when the government give loan to some states, they are meant to pay back. We also have interest, or they collect loan from the federal, from the other nation, or they serve as what? Means of what? Revenue. We also have what we call reimbursement, when their reimbursement is coming from the state for giving them something or giving them money to work on something, and they are meant to pay back in the future. Armed forces, they can hire armed forces from one state to another state, or from one nation to another nation, rather. Then government is meant to, the government of that nation that hired them is meant to pay back to the government. Then we also have what? Miscellaneous. Now, these are the categories of what? Revenue in line with the Nigerian Constitution that are meant to be recognized. But what are the accounting entry for all these what? Revenue, which is where we are going now. However, with 1989 budget, the federal government revenue were classified into two. Classification now, that classification of all those revenue we have itemized, they classified them into two. There are revenue that are meant to go to federation account. There are revenue that are meant to go to what? There are revenue that are meant to go to yeah. No, I'm doing the online. Maybe I'm going for now. Yeah. We now look at it from the federation account. Federation account is the account put in place by the government in which the revenue that is meant to be shared by the three tiers of government are being paid into. What are these revenue? Head 1, Head 2, and Head 3 are meant to pay to federation account. Head 1, Head 2, and Head 3 are meant to pay to federation account that will be shared by the three tiers of government. That is, that money must be shared among the what? The three tiers of government. We have the federal, the state, and the what? Local government. They are the ones to share the money in that what? Federation account. Now, what does the federation? Why at what? At 6 to what? To 17 are meant to pay to the federal government account. At 6 to 17 are meant to pay to the federal government account. At 6 to 17 are meant to pay to the federal government account. Are we together? Now, what do we mean by federation account? As we are talking about, this is the federation account. Inflow, we have what we call indirect tax, direct tax. We have what? Mining, that is crude oil. Then we have collection charges to be paid out of it, collection charges. Now, FRS is meant to collect 4% on non-oil revenue as their collection charges. Customs service 7% on the revenue generated. Then oil producing state is also meant to enjoy 13%, which will be deducted from oil revenue generated. All this will be added together, deducted from here, and the remaining amount will be distributed among the 3 tiers of government. Federal will collect what? In line with Revenue Mobilization Commission Act, they are meant to distribute the revenue in line with what? Federal will collect what? 52.68, state will collect 26.72, while local government will collect 20.60%. Now note, when we now talk of direct tax and indirect tax, under the indirect tax, VAT will not be paid to this account. Value-added tax will not be paid to the federation account. Value-added tax is excluded from this account. When it comes to what? Direct tax, the personal income tax of the what? Military officers, police force, residents of Federal Capital Territory, and foreign affairs are not meant to pay to this account. They are meant to pay to Consolidated Revenue Fund, which is the federal government account. That is what we refer to as federation account. While the second account we're referring to, that is the account of the federal government, where all other revenues are meant to be paid into, with the exception of Ed 1 to 3. It is the account of the federal government where all other revenues are meant to be paid into, with the exception of Ed 1 to 3. In this account, what are the things to be recognized in the what? We have the balance watchword, if any. We have what? Revenue. What are the revenue we are going to look at? We have statutory allocation from the federation account. We have what we call mining of mineral resources, that is solid what? Resources here. Solid.
Last question, I was the one that called you were in Boston. I was trying to ask you. So when I was going to the exam, I was very sick. I just came out of the hospital, so I didn't want to write anything because I was still sick. So I was trying to ask whether I should just what will it impact on my overall. He said I was just right, not, but I ended up saying, and then when you're in the bus, I couldn't just get that clarity. And you don't want to see any F at all. And that really now is this thing I don't and added effect. With the first badge, I lost everything.
Yeah.
I don't know.
Our time.
I know. Now, looking at it here now, when we talk of the mining of that mineral, some of the physical students are here. That was why that I don't want that to be part of the recording. Now, when we now look at it from the federal account, which is the Consolidated Revenue Fund account, what you are going to be having there, as what we have made mention of, is from Ed 6 to 17. And we specify what and what that are meant to be there. Now, this is Ed 6 in this account. And it's also meant to be state account also. We call it statutory allocation from the federation account. We have what we call the mining, which is solid mineral. We have what we call what? PAYE. The PAYE we are referring to, that is personal income tax of the armed forces, the police force, the resident of Abuja, or foreign affairs. We have dividend from investment, either at local level or at international level. Aside that, we also have what we call the disposal of government properties, transfer from contingency fund, transfer to contingency fund, depending on the way it is. We have what we call value added tax, loan repayment, or loan receipt, depending on how it is. Then this will now be what? Expenditure that are meant to be what? Paid out of the what? From the Consolidated Revenue Fund account, which is the federal government account. Personal emolument of statutory officers, other recurrent expenditure, loan, repayment and service, transfer to contingency fund, transfer to development fund. All these are the elements that are meant to appear in the statement of what? Consolidated Revenue Fund, which refers to as the federal government account. Now, when we now look at it, the above classification was again modified in 1994 fiscal year as follows. We now have it as, that was the reason why I said value added tax is not part of what? Consolidated Revenue Fund account. They now said that we have what we call federation account, value added tax account, and we also have what we call federal government account. That federal government account is also called what? Consolidated Revenue Fund account. Consolidated revenue, consolidated revenue. That's another name. Is that clear? They don't call it federal government account, they call it Consolidated Revenue Fund account. Is that clear? Then, when it comes to federation account, as I've made mention of, you can see what they made mention of. It says that federation account revenue head. The federation account was established by the section 162 of 1999 Constitution of the Federal Republic of Nigeria. The federation account is one in which shall be paid all revenue collected by the government of the federation, except the proceeds from the what? Payee of the personnel of the armed forces of the federation, the Nigerian police force, the foreign service officers, and residents of the Federal Capital Territory. Does it differ from what I've explained? No. Now, federation account is a distributable pool account from which all allocations are made to the federal, state, and local governments on such term and in manner prescribed by the law. Currently, the figure in the pool of distribution used by the revenue allocation formula over the years are shown below. Now, let's look at it. We have it initially, we have 1981 Acts. These are the way they distribute it. Federal 47, state 26.5. We have local government 10. We have special fund 8.5. We have derivative, that's oil derivative 2%. We have mineral resources 3%. We have initial development of federal capital territory 1%. Total of that is set to 100%. They review it and reverse it in 1981. So federal government is collecting 50.5%, state 30.5%, local government 10%, special fund 5.4%, 2% for the derivative, that is oil derivation. 1% is meant to be given to development of mineral resources. then 1% for general ecological problem. In 1990, they reversed it again, being reviewed, and the reallocation it 45, 25, 20, 5, 1, 1.5, 1, 1, 0.1 for stability of the economy. In 1992 again, they also review it again. As of today, the one we are still using is the one of 2004, which is 52.68 for federal, the state 26.72, and local government 20.6. That is the distribution they are using up to date.
Excuse me, sir. I want to confirm something.
I'm with you.
The initial was which year? Is in 1981?
1981.
Sir?
1981. 81.
And
That
also
is,
revolved in 1981.
yes.
Okay, sir.
Initially, they introduced that in 1981. Towards the end of that 1981, they review it again and they readjust the figure. In 1990, they readjust it again. In January 1992, this was done, another readjustment also came on board. In April 2002, they revisit it again and readjust the figure. Based on the federal executive order, are you with me? That was May.
I'm with you, sir.
They also readjust it to 56, 24, and 20. While in May 2004, which is what we are still using up to the date, we have what we call 52.68, we have what we call 26.72, and we have what we call 20.6 for the local government. Now, let's analyze it further for the formula we have made mention of. Note, 13% of the revenue derived from oil source goes to the state from which it is obtained in the consonance with the principle of derivation, which means all oil producing states are meant to share 13% of the oil revenue. Then 7% and 4% of the gross revenue in the federation account are allocated to the Customs Service and Federal Inland Revenue Service. Non-oil revenue. Now, they realized that for you to have a better understanding that the rates stated above are first line charge that is 13% derivation in the adjusted deducted in the oil sector revenue received from the total oil proceed. 11%, that is 7% plus 4% of the revenue receipts that are taken out of non-oil revenue. That one is now meant for the what? Nigerian Customs Service and Federal Inland Revenue Service. Federal Inland Revenue Service is entitled to 4% collection charges. Why? Nigerian Customs Service is entitled to 7% collection charges of the revenue generated. Then the next one, the allocation of the 36 states is meant to be distributed the net of the adjustment in earlier these notes or bullets. I will explain that. Now, there is a distribution that is meant to go to the 36 states. Abuja is considered as a state to make 37, which will share 26.72%. The same thing relating to the local government. As of today, the number of local governments we have is 774 local governments. 774 local governments. They are also meant to also what? Share the local government allocation in the federation account. 36 states will share the what? the 26.72, while 20.6% will be shared by the what? The local government. On what basis? To share the state and the local government allocation, they are meant to use the principle, revenue what? Distribution principle, revenue distribution what? Principle formula, where we have what we call the equal basis, population basis, landmarks, and IGR, internally generated revenue. 30% of that revenue will go to the what? Will be shared equally by the state and by the local government. 30%. That is equal basis. After that equal basis, we have population basis. The population basis is what? 20%. Sorry. Are we together? Okay. I even put it here. I don't even know I put it here. But it has been referred. Prior to this period, hello, prior to the one I made mention of, because there is an adjustment, the equal basis 40%, 40%, 10%, 10%, but they've adjusted it. We have 40, 30, and water on this. This one is on education. But presently, 40 is meant for equal basis, 30% is meant for what? As at present now, let me put it here. State and local government revenue distribution on the federation account. Now have it as equal basis as equity basis. %, population basis, population basis, 30%, land mass, %, internally generated revenue basis, 10%. Is it clear? Hello?
Yes, sir. This is what they are using. We are using now.
Yes. This is how to distribute the revenue from the after the allotment, the allocations that they are going to do. Do you understand? In the federation account, states They will now distribute the one allocated in that federation account to the states using this logic. This principle will be used. 40% will be shared equally among all the states, 30% will be shared on population basis, 20% will be shared on the land mass, and 10% will be shared on internally generated revenue. The same thing applicable to local government. But prior to this time, this one is in line with what? 2000 and what? 2004, 2004, 2004 revenue taxation commission. This is what they are still using up to date. Now, when we now look at it, there are a committee in that are meant to look into the federation account. Call it Federation Account Committee. These are committees set up by the government to manage any matter relating to the revenue matter in the federation account. Now, Federation Account Allocation Committee was set up by the Allocation of the Revenue Act, LFR, that is Legislative Federal Government of Nigeria, 2004, to deliberate upon and allocate funds for the federation account to the 3 tiers of government. The Federation Account Allocation Committee meeting is normally divided into 2. That is, that committee is divided into 2. We have technical session and we have the plenary session. Now, in terms of the technical committee, who are there to make up the technical committee? Under the technical committee, these are the people you are going to be seeing there. We have the Accountant General of the Federation as the chairman. We have the state accountant. We have representative of the following agency. We have the NNPC representative. We have IFRS representative, Customs Service representative, Department of DPR representative must also be there. Then we also have Revenue Mobilization, Allocation, and Fiscal Commission. We also have what we call representative also meant to come from the Federal Ministry of what? Finance. Representative from CBN. Representative from Nigeria Planning Commission. We have representative from the state and local government affairs. We have representative from the Vice President's office. We also have Directorate of the Military Pension, Office of the Head of Service of the Federation, Department of Civil Service Pension. All these are the committees that will make up the technical work, that look into the technical session of the Federation Allocation Committee. They are meant to look into the matter. But when it comes to their function, what are the functions they are meant to render? To consider the accounting returns of the revenue collecting agents, that is what the money that are meant to be paid to those collection agents, to deliberate and consider the revenue available for distribution. How much, after we deduct the charges, then how do we distribute the remaining money across the 3 tiers of government? To make recommendation for the plenary session for the adoption of the revenue being shared to the 3 tiers of government. Also to consider any other related issue stemmed from the plenary session. All these are what they are meant to look into. Then when it comes to what? The member of the Federation account that relates to what? Plenary session. We have what we call the Honorable Minister of Finance as the chairman, which is different from the technical. We have the State Commissioner of Finance Accountant General of the Federation. We also have what? State Accountant Generals. Then we have representative of the 13 organizations mentioned under the technical. There must be a representative from that end too. And their function is meant to look into what? To ensure that allocation made to the state from the federation account are properly and fully paid into the what? Treasury of each component. Their own is just to ensure that the money that are meant for the state and for the local government are being properly handled. To also submit annual report for the performance over the activities of the National Assembly. We also have what we call State Joint Local Government Allocation Committee. This is another committee to be put in place to look at the local government allocation. This committee was set up to ensure equal distribution of the statutory allocation to local governments from the federation account. And 10% of the internally generated revenue of the appropriation states are shared to the benefit in accordance with 1999 Constitution using the criteria equity, population, primary enrollment, and internally generated revenue, which is now what I've made mention of, equity-based population, and we have what we call landmass now, and internally generated revenue. That is what will be what. Then what are the committees? Who are going to make up this particular committee? We have permanent secretary of the local government affairs, or the chairman of the local government in each state, the representative from the Accountant General's office of the state, and the federal pay offices in the state. All those ones, they are also a member. They now said here that, which is what I've explained before too, the source of revenue payable to the federation account, head 1 to 3, is also stated here. Now, they now said head 1, directors. These are tax on goods and services in forms of custom, excise duty, and falsified penalties. Head 2, we have what we call tax. Directors. These are payable by the individual and firm, such as company income tax, petroleum profit tax, capital gain tax, back duty assessment, that's back investigation duty, and personal income tax. Then we also have head 3, mining. These are oil, pipe, license fee, rent of mining rights, mining fee, royalties on mineral resources, NMPC earnings from the direct sales, penalty for gas flood, and rent of oil well. All these are meant to appear in the federation account. But when it comes to consolidated revenue fund account, consolidated revenue fund was established by Section 80 of the Constitution of the Federal Republic of Nigeria, 1999. Except those revenue items which are specifically designed for other funds, all others shall be paid into the consolidated revenue fund account. What are the analysis, which is what I've made mention of, that all other revenue will be to the consolidated revenue fund account, with exception of head 1 to 3. You can now see the analysis head 6, head 7, head 8. All these are meant to be paid towards consolidated revenue fund accounts, as we have explained the other time. Now, we now have the charges that are meant to be recognized in this account. So what are the charges? Now, the charges include the following: personal income, that is what personal cost, that is personnel cost, that is the charges, the emolument salary, the salary of the statutory officers, that is what they mean by what that personnel cost they are referring to. overhead charges, and service of the national debt. Salaries and consolidated allowance of the statutory officers. These are expenditure charges chargeable directly to the Consolidated Revenue Fund, which include the what? Statutory officers, chairman, director general, commission of police, commission of complaints commission, public complaint commission, public service commission, Nigerian law reform commission. We also have what we call Independent National Electoral Commission. We have what we call Auditor General for the Federation, President and the Justice of the Federal Court of Appeal. We have Chief Judge of the Federal Supreme Court, the Federal High Court. All these, they are meant to be paid from there. We also have pension. It's also meant to be paid from there. Then, they now said here, value-added tax is a tax imposed on value which the supplier or seller added to the goods before selling it. That is value at the additional money, that is the profit. Government is collecting profit from the government is collecting tax from the profit you have added to the cost of your service. Now, on that note, the introduction of the value added was necessitated by the need to boost the revenue of the government from non-oil service, from the fluctuation in oil revenue due to the glut in the international market. When we say glut, it means what? Excess. In the oil market at that time, they noticed that there is what we call oil glut. There is too much oil in the market. Near there, people are supplying oil into the market. As a result of that, government find a way around it. Now, when we now look at it, federal government look at it, and the general government look at it, that what can they do to be able to manage the situation? They said the best bet is to look at it and introduce what they call VAT, value-added tax, for government to be able to raise funds to manage the economy of the nation at that time. The VAT was introduced in 1994. VAT was introduced in 1994. You guys have seen it. And how do they distribute VAT? By the law, VAT distribution is being carried out in another dimension that is different from what we have idea of. Are you with me?
Yes, sir.
Now, this VAT is meant to be distributed across the 3 tiers of government. How do they distribute it? It was formerly 5% to be charged, but later they introduced it to 7.5% in 2020, which in 2023, they increased it to what, 12%, but they reversed it back to 7%. The adjustment has not been done. Then how do they distribute VAT across the 3 tiers of government? VAT distribution. Federal. Federal takes 15%. State takes state takes what? 50%. Then local government takes what? 35%. This is VAT distribution. That is how VAT is meant to be distributed by the 3 tiers of government. Please, any question on this part before we move on? Okay. Then, after that, what are the other accounts to be considered? We have what we call development fund account. This is the account put in place to monitor capital projects in line with what? The Fiscal Responsibility Act and in line with what? Finance Act. Now, this was established for the purpose of capital what? Projects. Let's look at it. The existence of the development fund was solidified by the 1999 Constitution of the Federal Republic of Nigeria, although created earlier by the Section 25 of the Finance Act and Management 1958. The fund was established for the purpose of capital projects. The source of money created to development fund could be divided into 4. The money you are going to be seeing in development fund account is divided into 4. What are these? Anything coming from the what? Consolidated revenue fund account, external grants, we have internal and external loan, we have what we call gratuity, grants. These are what you can see. Then when it comes to charges, federal government can also give out loan to people. Federal government can give out loan to other nations. Federal government can give out grants to other nations. They can also refund back to the Consolidated Revenue Fund account. All these are the charges in this particular account as been stated, and the general capital expenditure also. That's we have what we call summary of capital expenditure. We have what we call administration of general expenses in terms of what? Managing the army barracks, police station, staff houses, motor vehicle, and hospitals. All those ones, they are relating to what? General administration. Then when it comes to state loans made to state, that one is also what? Or external financial obligation. They give money to other nations. They can also give grant to other nations. All these are part of the charges in the development fund account. Another account that you can also look at is what we call contingency fund account. That is another account put in place in 1999 Constitution, where they look into the unforeseen circumstances or what the government don't plan for and it happens, like natural disaster. Now, what does it mean for? The fund is set up to meet unforeseen expenditure, urgent situation occurred by natural disaster. The contingency fund derives its income from consolidated revenue fund. That is, its own money is going to come from consolidated revenue fund account. And the charges is basically relating to anything that has to do with what? Unforeseen, what they don't plan for, e.g., natural disaster, COVID, Ebola, all those situations, they are meant to be funded from the contingency fund account. This is the summary of these parts. Any question? Hello?
Yes, sir.
Any question, please? Ask question now. We don't have any question to ask, Abi. If we don't have question to ask, are we with me? Can we look
Yes,
at the
sir.
question part? Before we call it a day, at least to solve one question.
Yes, we are with you, sir.
Okay. Absent of no question, let's look at the way the question is always look like. This is the simplest ever.
We have class by 5 p.m.
I know. Okay. We can look at the calculation part in our next class if people have class now.
Sir, can we have you on Fridays night? You're supposed to make up a class with us last weekend. Can we have you on Fridays night? I don't know how my colleagues will react to that, if they will be available.
Can we make
And
it?
also,
Can we make it on Wednesday?
Class
It
fine.
Because that Friday is already booked for meetings and other things for business.
okay, sir. I don't know.
Wednesday is free evening.
By what time on Wednesday, sir?
We can do 8 to 10.
We have
That class on Wednesday.
No, we have class on Wednesday.
You have class on Wednesday.
Yes, sir.
We have financial management on Wednesday.
It's free.
What about Monday?
There is
PM
class.
now. There is
Monday,
PM on
Tuesday,
Monday now.
Thursday.
The only day we don't have class is on Friday.
Friday.
Yes.
Only Friday.
Or else, what of tomorrow evening? If I don't know.
So there's class tomorrow for
That's
We have class tomorrow evening.
There's class tomorrow too, have you?
evening,
Yes.
but
Yes.
it's kind of free in the afternoon, sort of.
What
We
about
have
very
class
early in the
7
morning?
tomorrow. We have class very early tomorrow morning.
We have tax 8 to 10.
what about like from 12?
Okay. Let's see. Who is the representative of this class? As in the governors.
We don't have representative.
Don't have
We are
a rep.
representative.
Okay. What you need to
Yeah.
do is this. Let's follow up with me on that Friday. If it's going to work out, then let's have a discussion on Thursday. We can be able to look at how we are going to go about it.
Okay, we should remind you about it on Thursday, Abby.
Yes.
Okay, sir. We will do that.
Any other question, please?
Can we call you, sir? Or we have to
Yes,
put
you
it
are
on
free.
group chat?
I'm not joining today. Can you hear me, sir?
Okay, I'm with you.
I said this is my first time of attending your class. I'm just joining today. So I don't know if it's possible for me to get the notes on other previous topic and maybe the recording of today with this particular notes now. So I can meet up with the class, sir.
The second Mr. Wasi will forward the recording to the platform. Then this particular material, I will send it to the group again because I've done another update on that material.
Okay,
And
sir.
secondly, the second lecturer is also having some other things that is also giving out. Then I don't see much difference in the two, but this one is a comprehensive one. And he also have his own work. You can use it. It's going to be a guide to you.
Okay. So what of the previous class?
Do you know what
The
you
previous
do?
class, yeah.
Yeah.
You get the recorded video too. Once
The
they send
record
it,
version.
I've gotten the recorded video. I just need the notes so that if I'm going through the video, I
That's
can.
what I'm saying, that the material I'm sending, that note is there already.
Okay.
On my own end.
Okay.
Okay.
All right, sir. Thank you.
Welcome. Any other question, please? Well, absence of no question, we can end the class now. We continue from there in our next class. We can be able to finish this. There are about 4 or 5 questions we are going to attempt in this part. Then we can look at it from there. Okay, thank you very much for part of today's class. Enjoy the rest of your day.